I sold my dad's business. Then my uncle claimed he owned 51%, and he chose the exact moment I couldn't undo anything to drop that bomb. I'm 29M in Texas. My dad ran a small manufacturing shop outside Houston for nearly 20 years. Custom parts, local contracts, nothing glamorous but steady. I grew up sweeping floors there on weekends, learned everybody's names, watched my dad stress over payroll more than vacations. When he died last year, it wasn't just grief, it was a logistical hurricane. Employees asking what happens next, vendors calling, clients nervous, bills arriving with his signature on them. My dad left a will naming me executor and beneficiary of the business assets. He also left me a blunt note that said, "If the shop ever becomes a burden, sell it clean. Don't let anyone help you into losing it." That line stuck with me because I already knew who he meant, my Uncle Gary. Gary, 55M, is my dad's older brother, and he's always been the loudest person in any room. He talks like he's successful, but he's mostly a storyteller. I almost bought this. I was about to partner with that. I could have been rich if, when my dad was alive, Gary would drift in and out of the shop like a consultant, giving unsolicited opinions, calling workers kid, and acting like he had authority because he shared a last name. My dad tolerated him the way you tolerate a neighbor's barking dog. Annoying but familiar. After the funeral, Gary showed up at the shop with donuts and that fake supportive grin. He hugged me too long and said, "We'll run it together now. Your dad would have wanted that." My dad never said that, but I didn't argue. I was drowning. For the first few months, I tried to keep the business running. I hired an operations supervisor, worked with the accountant, and kept contracts alive. But the stress was eating me. The shop needed new equipment, the biggest client wanted lower pricing, and my dad's old foreman was talking about retiring. I realized the truth. My dad ran that place because he lived for it. I didn't. I wanted to honor him, not become him. So I started exploring a sale. I hired a broker, got valuations, talked to 2 local buyers and 1 bigger competitor. I kept it quiet, not secretive, just controlled. Because the moment family hears sale, they treat it like a piñata. Gary still popped in and asked leading questions. "So what's the plan, champ? You keeping it? Expanding? Bringing on partners?" I just say, "Still figuring it out." He nodded like he was part of it. 6 months later, I got a serious offer from a competitor. $1.8 million for the business assets, inventory, and contracts, with an agreement to keep most employees. It wasn't an insane price, but it was fair, and it gave stability to the staff. My attorney and CPA reviewed everything. We did it by the book: due diligence, lien checks, seller disclosures, closing timeline. We closed on a Friday. I felt weirdly empty afterward, like I just sold a piece of my childhood, until my phone rang that Sunday. It was my Uncle Gary. He didn't say hello. He said, "So you sold it." My stomach tightened. "Yes," I said. He exhaled like he'd been waiting. "Good," he said, "because now we settle up." Settle up. I asked what he meant. Gary laughed once, sharp. "I own 51%, he said. "Always half. Your dad and I did it that way years ago. You just sold my company without paying me." My blood went cold. "That's not true," I said. Gary's voice stayed calm, too calm. "Oh, it's true," he replied. "I have paperwork. You either cut me my share, or I'll file suit and the buyer will unwind the sale. And if they unwind it, you'll look like a fraud." Fraud. He said it like a label he could stick on me. I stared at the wall, trying to breathe. I asked, "Why didn't you say this before closing?" Gary chuckled. "Because you would have tried to screw me," he said. "This way you can't back out. You've got cash now. Pay me. Pay me." Like he'd been quiet on purpose to spring it after the money landed. The worst part was he sounded confident enough to be dangerous. I told him, "Send the paperwork to my attorney." Gary said, "Oh, I will. And don't think I won't go to the buyer, too." Then he hung up. I called my attorney immediately. He asked one question. Was Gary ever listed anywhere as an owner? Corporate filings, tax returns, bank accounts? I said no, at least not that I'd seen. My attorney said, "Then he's bluffing or forging. Either way, we respond fast." That night, Gary emailed a scanned document titled Ownership Agreement, claiming my dad transferred 51% to him in exchange for capital investment. It had my dad's signature. It had a notary stamp. And it looked real enough to scare someone who didn't know better. But my dad never mentioned any transfer. Never. And our CPA never saw any K-1s or ownership splits. Still, one forged document can create chaos if you don't crush it correctly. My attorney didn't panic. He got quiet, which is how you know a lawyer is about to become a weapon. He said, "Do not contact Gary. Do not argue. We treat this like a fraud attempt." First thing Monday, he pulled every official record we could. Texas SOS filings, assumed name certificates, UCC filings, property liens, prior business tax returns, K-1s, bank signature cards, insurance policies, even old vendor contracts. If Gary owned 51%, his name should have been everywhere. It was nowhere. The business entity showed my dad as 100% owner until his death, and then the estate. The CPA confirmed Gary never received distributions, never reported ownership income, never had access to accounts. That made the capital investment claim look even more ridiculous. But ridiculous doesn't matter if a forged document can scare a buyer into pausing payments or dragging you into litigation. So we went straight to the weak points of Gary's agreement: the notary, the date, and the signature. The document was dated 8 years ago, supposedly signed at a UPS store notary. My dad was obsessive about paperwork. If he transferred majority ownership, there would be attorney notes, amended operating agreements, tax updates, bank changes. Nothing. My attorney zoomed in on the notary stamp. It had a commission number. He looked it up. The notary existed, but the commission start date was 2 years after the document's supposed signing date. That meant the stamp couldn't have been used back then. Either Gary used a copied stamp or he edited the image. One detail, one fatal crack. Then my attorney compared the signature on the agreement to my dad's known signatures on real documents: bank forms, his will, his property deed, and a stack of old checks. My dad's signature changed slightly over time because his hand got shaky in the last couple of years. The signature Gary used was an older, cleaner version, like it was traced from a scanned document from a decade ago. Worse for Gary, my dad always wrote his middle initial on legal docs. Always. The signature on Gary's agreement didn't include it. That kind of omission is common when someone copies a signature from a casual card, not a legal filing. My attorney told me, "This is likely forged." Now we lock the buyer in the court narrative before Gary controls it. We sent a formal letter to Gary demanding preservation of all evidence and warning him that presenting forged documents constitutes fraud and could be referred to law enforcement. We also sent a proactive notice to the buyer's counsel. An individual is asserting a fraudulent ownership claim. We believe it's baseless. We are investigating, and they should direct all contact to our office. The buyer's attorney responded quickly, concerned. They asked if the sale could be challenged. My attorney replied with facts: no ownership filings, no tax evidence, and we had identified inconsistencies in the notary stamp. The buyer relaxed a bit, but warned, if he files a lease pend-ins or seeks an injunction, it could create operational headaches. That was Gary's real leverage. He couldn't necessarily win, but he could create expensive noise. And Gary used it. 2 days later, the buyer's attorney forwarded me an email Gary had sent them directly. "You purchased a company in which I own controlling interest. Your transaction is void. Cease operations or you are liable." Cease operations. He was trying to scare them into freezing payments and forcing me to settle. My attorney's reply to the buyer was calm. "He is not an owner. This is harassment. Please preserve the email as evidence." Then we did the smartest move. We contacted the notary. The notary's office responded in writing that they had no record of notarizing an ownership transfer for my dad on that date, and that the stamp image did not match their current stamp template. The notary also confirmed the commission number and start date. That email was the kind of boring, factual proof judges love. Meanwhile, Gary started applying family pressure. My aunt called crying, saying Gary was just trying to be treated fairly. I asked her one question: did he ever pay taxes as an owner? Silence. Then she said, "He helped your dad." Helped. That word covers a lot of manipulation. The next escalation came fast. Gary filed suit. Not in the main business county, but in a smaller neighboring county. Classic tactic called forum shopping, hoping for a friendly judge or slower process. He sought a temporary restraining order claiming I sold his property and asking the court to freeze sale proceeds. Freeze proceeds was the goal. He didn't want to shop back. He wanted the money locked, so I'd panic and pay him to unfreeze my life. My attorney prepared for the hearing like it was a demolition. He filed an emergency response attaching the SOS ownership records, tax returns showing no split ownership, CPA affidavit, notary commission mismatch, and the notary's written denial. He also filed a counterclaim for fraud and request for sanctions. Then he did something even better. He subpoenaed Gary's alleged capital investment proof, bank transfers, checks, receipts. If Gary invested, there would be money trails. Gary produced nothing. At the TRO hearing, Gary showed up in a suit acting offended, like he was the wrong patriarch. He told the judge he trusted his brother and never needed paperwork until I betrayed him. He waved the forged agreement like it was sacred. The judge asked my attorney, "Is this legitimate?" My attorney said, "No, Your Honor. The notary commission did not exist on the date shown. We have the notary's written statement. We also have 8 years of tax records showing 100% ownership by the decedent. This is a fabricated document." The judge's expression hardened immediately. Gary's attorney tried to pivot, saying maybe the date was a scrivener's error. But you can't hand-wave a notary commission start date. The judge denied the TRO. No freeze. No leverage. Gary's face tightened as he walked out. That's when I learned the real twist. Gary wasn't improvising. He'd planned this because he had a folder of backup documents ready. Photocopies of old shop insurance forms with his name scribbled in margins, fake meeting notes, anything to create smoke. But the more paper he produced, the more inconsistent it got. And inconsistency is how fraud collapses. After the TRO denial, a normal person would have backed off. Gary didn't. He doubled down, because once someone commits to a lie in court, backing off feels like admitting guilt, and Gary's whole identity was built on never being wrong. He started calling relatives, saying the judge was biased, that my attorney tricked the court, and that he'd get his money one way or another. One way or another sounded less like a lawsuit and more like a threat. My attorney told me to stop engaging with family entirely while the case was active. They will be used as witnesses whether they want to be or not, he said. Then we hit Gary where fraud fears the most, discovery. We served formal requests demanding the original signed ownership agreement, any emails or drafts related to it, proof of the alleged capital investment, and any communications Gary had with my dad about ownership. We also demanded Gary's devices be preserved because the notary stamp mismatch suggested digital editing. Gary responded with delays and objections, claiming the original was in storage. In storage. Convenient. My attorney filed a motion to compel and asked for expedited inspection because Gary was already contacting the buyer and interfering with operations. The judge granted it. Suddenly, Gary had deadlines. Deadlines make liars make mistakes. Gary produced a better scan of the agreement. He thought he was helping himself. He wasn't. The new scan had a slightly different notary stamp, sharper, cleaner, and with a different commission expiration date. Different stamp. Same supposed document. My attorney stared at it and smiled. He just proved it's being edited, he said, because real original documents don't change stamps between scans. Only digital files do. Even worse for Gary. The metadata on the PDF showed it had been created recently using common editing software. It wasn't a scanned file from 8 years ago. It was a newly generated PDF with a pasted signature and a notary stamp layer. My attorney hired a forensic document examiner, an expert who testifies about signatures, ink, and digital manipulation. The examiner compared the signature on Gary's document to my dad's authenticated signatures and concluded it showed signs consistent with tracing or copying, not natural signing. The examiner also noted the pixel patterns around the signature and stamp indicated they were inserted as images, not part of an original scan. In plain English, fake. Then we subpoenaed the UPS store location Gary claimed the notary used. They provided a record. The notary commission number Gary referenced wasn't active on the date listed, and the notary log didn't show my dad's name. Gary's attorney tried to argue logs can be incomplete. The judge didn't like that. Judges hate when people treat notarization like a maybe. Then came the capital investment proof. Gary claimed he'd invested $300,000 over time in cash and materials. Cash is the liar's favorite word because it's hard to trace. But you can't invest $300,000 in a legitimate business without consequences. Equipment purchases, accounting entries, vendor receipts, loan documents, something. Our CPA testified the books showed no such injections. Gary then pivoted and said the investment was sweat equity and introductions. Introductions aren't capital. Sweat equity isn't a controlling stake unless it's documented. Gary's story kept mutating. That mutation became our weapon. Meanwhile, the buyer began getting nervous because Gary kept emailing them threats. The buyer's attorney asked if they could seek their own protective order against Gary for interference. My attorney suggested we do it together. We filed a motion for an injunction preventing Gary from contacting the buyer, employees, or clients, and preventing him from representing himself as an owner. At the hearing, we presented Gary's emails to the buyer demanding they cease operations. The judge granted a temporary injunction. Gary was now court-ordered to stop interfering. He violated it anyway. 2 days after the injunction, he showed up at the shop. Not inside, he stood in the parking lot and tried to talk to workers during lunch, telling them I sold them out and that he'd be back in charge. One employee recorded it on their phone. That recording became Exhibit A for contempt. When my attorney filed the contempt motion, Gary's attorneys suddenly tried to negotiate. They offered to settle for $400,000. Not 51% anymore. Just a number. That offer was the clearest proof that this was never about true ownership. If he owned 51% of a $1.8 million sale, he'd demand around $918,000. He wasn't. He was picking a number that sounded big, but maybe payable, hoping I'd buy peace. My attorney told him no. Then we got the smoking gun. In an attempt to scare me, Gary forwarded me an email thread he claimed was proof my dad acknowledged the 51% deal. He didn't realize the forwarded email included a header line showing it was drafted recently and sent from Gary to himself. He had created a fake old email by sending it to his own alternate account and backdating the text in the body. He thought no one would notice. My attorney noticed immediately. He said, "This is fraud on fraud." He's digging. At the next hearing, the judge confronted Gary about the changing notary stamps and the forged email. Gary tried to talk his way out, got defensive, accused everyone of attacking him. The judge didn't yell. The judge just said, calmly, "Mr. _____, you appear to be submitting manufactured evidence." Manufactured evidence. That phrase hit the room like a slap. The judge ordered Gary to turn over his devices for limited forensic inspection and warned that continued misconduct could result in sanctions and referral. Gary's face finally showed fear. The finish wasn't loud. It was precise, like a door closing and locking. The forensic inspection order was what finally broke Gary's confidence, because you can bluff relatives, you can bluff buyers, you can even bluff early hearings. But you can't bluff a forensic timeline once a judge is staring at it. Gary's attorney tried to stop the device inspection by offering a global settlement and promising Gary would walk away. Walk away meant please don't look. The judge denied the attempt to halt discovery and kept the inspection in place. Within days, the forensic consultant imaged Gary's phone and laptop under court supervision. They found exactly what my attorney expected: the PDF editing files, the image layer of the notary stamp, multiple versions of the agreement saved under different names, and a folder of my dad's signatures pulled from scanned documents. There are also drafts of the fake email proof and a template for iMessage-style screenshot generators. Gary had been manufacturing evidence like he was building a scrapbook. The forensic report showed the first file version was created a week after the sale closed, not 8 years ago. The ownership agreement wasn't discovered in storage. It was created in panic after Gary learned I'd sold the shop without paying him anything. That alone killed his case. But then they found a message thread with his friend, another guy from their hometown, where Gary literally wrote, "He's young and scared." He'll pay to make it stop. I just need the paper to look real. That sentence was the heart of the motive. Not rightful ownership, not family fairness, pressure and extraction. At the contempt hearing, the judge was done being patient. My attorney presented the employee's parking lot video showing Gary violating the injunction, the forensic report showing manufactured evidence, and Gary's own text about paper to look real. Gary tried to speak, but every time he opened his mouth, it made him worse. He claimed he felt entitled because he helped his brother. The judge cut him off and said, "Entitlement is not ownership." Then the judge found him in contempt for violating the injunction, ordered him to pay the buyer's legal fees for interference, and sanctioned him for submitting falsified evidence. The civil claim was dismissed with prejudice. That meant Gary couldn't refile, and the judge referred the matter to the district attorney for review of potential forgery and fraud on the court charges. Referral doesn't guarantee charges, but it changes everything because now Gary's family dispute becomes a criminal file. The buyer, seeing the court order and forensic findings, stopped worrying. They kept operating, kept paying the remaining sale installments, and they issued their own no trespass order against Gary. That part felt strangely satisfying. Gary's power had always been social, the ability to walk into places like he belonged. Now he had paper walls around him, orders, injunctions, documented consequences. Then came the final twist I didn't expect. After the case collapsed, Gary's ex-wife contacted my mom. She didn't call to gloat. She called because she was scared. She said Gary had been drowning in debt, serious debt, and not to the bank, to private lenders. The kind of debt with weekly payments and late fees that escalate into threats. She said Gary had been telling people he was about to come into money because his brother's kids sold the shop. In other words, Gary didn't just want money because he was greedy. He needed money because he'd promised money to someone else. And when he saw my sale, he tried to turn me into his emergency exit. My attorney wasn't surprised. He said, "That's often the real reason people manufacture claims. They're not chasing wealth. They're chasing relief. Relief at someone else's expense." Once I heard that, a lot clicked. Why Gary waited until after closing, why he tried to freeze proceeds, why he kept escalating even after losing early, why he violated the injunction like a man with a countdown clock. He wasn't thinking long-term because he couldn't. He was trying to grab cash before his own consequences hit. He picked me because I was family, and he assumed I'd fold to avoid conflict, the way my dad always half-folded to keep peace. The difference was I had my dad's note in my head. Sell it clean, don't let anyone help you into losing it. I didn't just protect the money. I protected the truth of what my dad built. A few months later, my attorney told me the DA's office filed charges for forgery and tampering with records. Gary took a plea deal that included probation, restitution for legal fees, and a no-contact order. He lost more than money. He lost credibility. In our family, the story used to be Gary is a mess, but he means well. After court, nobody could say that with a straight face. My mom stopped answering his calls. My aunt stopped defending him. And I stopped carrying guilt for not keeping it in the family, because what Gary tried to do wasn't family conflict. It was theft with a familiar face. The last time I saw Gary was outside the courthouse after the plea hearing. He looked smaller, older, and furious. He stared at me like I'd taken something from him. I wanted to say 100 things. Instead, I said one. "You could have just asked for help." Gary laughed bitterly and said, "Help doesn't pay my bills." Then he walked away. And in that moment, I understood exactly why my dad wrote that note. Because he knew some people don't want help. They want control.